Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, we are just marginally into the green as far as the Nifty is concerned at 22,128. Although there are several pockets that have picked up pace towards the latter half. You can look at realty stocks that are doing well today, 1.4% higher in trade. A lot of these stocks are actually buzzing. You have metals that have improved from the day's low. They are about 1.2% higher. IT stocks are doing better today as well, 0.7% uptick for this one. You have pharma, auto, consumer durables, all of these pockets, even FMCG slight gains, and mid caps are also into the green at this point in time. India VIX has slipped and that's led to some improvement on the sectoral front. Among the stocks on the Nifty, you have BEL, which is the top performing stock on the Nifty as of now. That's almost up by 4.5%. Grasim, Eicher Motors, JSW Steel, Wipro, these are the other top counters as far as the Nifty movers are concerned. On the downside, you still have Reliance Industries as the biggest heavyweight that's penning down the markets right now. You can look at 2.5% of a loss for Reliance Industries. It's trading at 1170 odd levels. Coal India, Bajaj Auto, Bajaj Finserv and HDFC Bank as the other heavyweight counter that's pulling down the Nifty or putting a lid on the upside as far as the Nifty is concerned. We also have among the F&O movers, you have Supreme Industries that are doing well, Tube Investments, IRFC, Prestige Estates as some of the counters that are up and about. Whereas on the downside, you have IGL, Indraprastha Gas in the F&O segment that's down by over 9%. IFL Finance, SJVN, IRFC, Oil India, Page Industries as all of those stocks that are actually declining in trade. Let's welcome our guest on board to really understand the current tenure and the texture of the market. We have Mr. Kunal Ramya, founder of The Streets, joining in. Kunal, warm welcome. Good to have you with us. Well, March series started off on a very somber note. Today again has been extremely choppy from the word go. What exactly and how exactly are you assessing the sentiment on D Street?
Good afternoon, Sakshi, and good afternoon to all our viewers. So, as you rightly mentioned, we saw a sizable correction. In fact, the indices are down by around 16.5 to 17% from the highs of October. In fact, the stocks are much more down. They are down by 40 to 50%. And now the question is whether this seems to be the final bottom or there is more pain left on the lower side. So, now from here, probably we'll have to go very stock specific. The way we were discussing during January and February, I think the same theme will continue. We'll have to be very selective from here on. I think indices are near to the support, reason being index Nifty per se. Today made a low of around 22,000 and that was the low somewhere between Feb to June 2024. We saw the election day low also near to the same level itself. So I think this seems to be a good level. If at all indices wants to continue the uptrend, this can be a good consolidation zone and from here on we can see some kind of, the uptick coming in at least.
Okay. Have you spotted any safe havens, any value picks in this current dip in the recent few days of a sell-off that's pulled down the Nifty to closer to 22,000 now? Kunal, what is looking attractive to you at these levels where you've already started to nibble in?
See, again, Sakshi, what I have given importance is to the trend again. And secondly, in this entire correction, I'm just figuring out whether there are selling volumes or there are no volumes. So the one such counter is REC. Now look at the counter that's down by around 45% from the high levels. We were seeing this counter near to 640 levels and the trend was very strong. Right now it's trading at 377. In this entire correction of 45% correction from the peak, there is no major selling volume on the counter. And the broader trend on the last 4 years is still absolutely intact. This seems to be like a mean reversion. So I think these are the counters and these are the pockets to watch out for. REC, PFC, BEL, which you mentioned in the opening remark itself. I think these are the counters which are showing good the risk reward ratio at the present level, though today's bottom might not be the final one, but we'll just have to wait and see if there is a higher top, higher bottom. I think this can be the good level to watch out for this entire PSU stocks. Right.
Absolutely. Okay, got that. Let's also look at the mid and the small caps where pain has been more profound. Kunal, so how are you assessing the moves here? Again, is it extremely stock specific in the mid and the small caps? What should one do with their SIPs that have been going much more towards the mid and the small caps, and these are the portfolio spaces that are bleeding the most for retailers?
So actually, today morning itself, we had a con call with a couple of our major investors, and now
Okay.
the assessment which we took out on the small cap index 250 was
Hmm.
that if you look at the historical data, somewhere between 2022 and 23, also the index had actually come down by 28%. I'm giving you the precise dates. That's between January 2022 to June 2022, and there was Russia-Ukraine war situation. But that correction was spanning over the period of 6 months. Then the capitulation happened, and eventually we saw the uptick coming in. What's happened recently is that these over leveraged positions due to MTF buyings and whatever, the indices have come down very quickly. This time the time correction was hardly any. We saw the price correction and index are down by 28%. As I mentioned again in the beginning, I think stock specific view will make a lot of sense if someone is thinking of continuing with SIP or starting SIP. 100% this is a time to actually think of adding more, because I'm not saying that this is going to be the final move, but I think correction is the time where one should think of initiating the buys. And index per se, I'm very comfortable at this level. Risk reward ratio is very favorable. I'm not saying that the uptrend is already begun. That might just take time, but these levels are something to watch out for.
Okay, fair point. Let's nibble into and look at some of the stocks that are actually, buzzing in trade today. Let's talk about BEL, the top performer on the Nifty. Now, we do know how in the last 4-5 months of a decline, defense space has been, the worst hit, because this was a space that was creating a lot of FOMO. People invested at higher levels. The rally was only one way. And when the correction has started, it has impacted all these large caps, like even HAL, BEL, the shipbuilding stocks as well. Now that it is started to show us some bounce off and on, what is your own approach to the likes of HAL and BEL? Do you think people who have this stock at much higher levels, this is the right time to average? For those who may be looking at a fresh entry, should they be looking at this space right now?
So again, Sakshi, you just took my two counters itself. In the entire defense space, I'm very comfortable with BEL and HAL. Now, the
Okay.
rationale behind that is that if you look at HAL performance of last entire year, that's from March and April 2024 so far, this counter has made bottom near 240 three times. Even on 4th and 5th of June, when there was panic, this counter went down to 225, but again, it reclaimed 240 on the closing itself. On the higher side, it was continuously facing the resistance near 300 mark. As of now, in today's session, it's up by around, I guess, 4.5-5%, if I'm not mistaken, and this counter is again bounced from 240 itself. If someone is thinking of initiating a positional buy, then this 240 zone is something to watch out for on BEL. If the counter gives a decisive closing below 240, and with the volumes being very, very high compared to at least say 15-20 days volume, I would take an exit. But otherwise, this positional bet will definitely remain on for me. And when it comes to HAL, again, the trend on the weekly chart is absolutely positive, very, very strong. In fact, today's move is very comforting because it has come right from the support level. I'm just waiting for one trigger. If someone wants to play momentum, then 3,300 is a level to watch out for. If the counter goes about 3,300, then with the stop of 3,150, one can certainly initiate buy. Positional traders can definitely take the opportunity of decline till 3,000 on HAL and keep accumulating this.
Okay, fair point. I hope this has helped a lot of viewers who have a lot of interest in defense to get some clarity as to how do you approach some of these names here. We'll also talk a little bit on some of the other spaces. I want to first bring up to you the auto pack. Now, why am I asking this is because over the weekend we've seen numbers come through for sales for a lot of these companies, and there has been a mixed performance yet again. There are some that have reported growth. There are others that have recorded weakness year on year as well in several of the key segments. What are you making of the current auto scenario right now? Is there any key stock that is appealing to you more than the others, especially the likes of Tata Motors and M&M that have fallen the most in the recent fall? What are you making of that as well, and how are you advising clients on the auto pack?
See, numbers were poor on Tata Motors front, but again, if you look at the historical performance, the counter has gone up significantly from April and May 2023-24 till say July 2024. That rally itself was not able to. I mean, I was not able to justify the rally as to why the rally is coming now, when the corrections are coming in. I mean, I find these levels to be very very comfortable. So let's just take an example of Tata Motors, which is our top shortlisted counter as of now. Now, August 2023, where the rally actually began, that level was 600. From there, we saw the counter going up to as high as 1186. That's almost 100% returns in less than a year. And now the counter has come back to the same level. At 600, I think this entire seems to be like a time correction to me. If counter holds on to 600 mark decisively, then one can think of shortlisting this counter for initiating a buy. Again, let's not catch the falling knife. Let the counter settle down near 600. It might take a week or two, probably 3 weeks. We'll just wait patiently. If the counter consolidates and comes out of it, that will be the level to initiate buy, and the stop on this entire positional view will be 600. So this is the first counter. Second counter which I like the most is Eicher Motor. Again, this counter has not corrected at all, and that's showing its inherent strength. The strong support on the chart is 4600, 4675, that's 4700 levels. Consider that as a good support and think of initiating a buy on this. One counter is at the bottom, the second counter is in the sideways consolidation. So I think that can be a balanced approach on the entire sector.
Okay, fair point. But let's also talk about the heaviest weighted stock, Reliance Industries on the Nifty. What do you think is happening to the counter? I mean, the way it's been slipping, and it's now tested 1200 odd levels as well. It gave a negative return in 2024. Now it's further slipping lower, even though the targets are actually much higher from most of the brokerage houses there. But the stock has been only in pain and has, in fact, from the time the bonus announcement came in, it has been only going downhill. What are you suggesting investors to do at this point in time? How should one assess Reliance Industries? Is it the right time to start picking the stock, or do you think further downside can be still seen on this?
I think my position is revealed to you completely. So again, this is the counter which we have initiated by today itself. Now, the strategy on this is very, very simple. We have seen Reliance Industries getting into sideways consolidation for almost 2.5 months time. Today was the decline and it came down to 1170. In futures, it's trading at 1175. So the strategy which we have created is going long on the futures and creating short straddle at 1200. That's selling call and put of 1200. Now the expectations are that for the month of March, the counter might remain sideways with positive bias, and this view is taken in line with the entire trend of last 3 years. Historical data is suggesting 1150 to 1175 as a strong support.
Okay.
Consider that support, and one can think of initiating a buy. If someone wants to play purely on the delivery front, wait for the counter to come near 1160 kind of levels, where you can have a favorable risk reward ratio. In futures and options, at present level, one can think of buying, but create some hedge position for it. So think of selling call options. Even if the counter remains sideways, our view is to earn at least 7 to 8% ROI on the deployed capital on this strategy. So yeah, it's looking very attractive to me as of now.
Okay, got that. So those who are actually looking at Reliance Industries, this could be a good entry point, as Kunal has really mentioned at this point in time. Okay, let's discuss some of the other spaces. Today, real estate is buzzing strong, 1.4% higher. In the last 3-4 weeks of a sell-off, it was realty that was giving up most of the gains that it had garnered. But again, there is some bounce that is returning on the space today. How is your approach on this one, and any key stocks that you prefer over the others?
Yeah, I was looking at only one counter, and that was DLF. And I remember in our last communication on air, we were discussing about DLF, and I had mentioned that the strong support for the counter is near 700. In fact, it
Yes.
decisively broke that level and it went down significantly. It went down till 620. Now,
Yeah.
that was a level where even my position stops were getting triggered and we had to take an exit. But now this counter is showing again a comeback. I will not be in hurry to initiate buy on this first uptick because it's still in downtrend. If the counter reclaims 700 mark, 700 because that was a support. So if it reclaims that level, we can think of initiating a buy at that time. As of now, I'll think of avoiding this entire space. it's only because none of them are showing me any strong momentum or say the trend being intact. So we'll just wait. If DLF reclaims 700, we'll just revisit and we'll discuss about the same with our viewers. But otherwise, I'm avoiding this entire space for now.
Avoiding this space as of now. Okay, anything else also, since you're talking about avoiding, what else are you avoiding in this market? What is supposed to be absolutely remain cautious about, even in this current downfalls? Maybe some people will feel that this is the bottom and this is the right time to bottom fish, but there could be far more correction from here as well. So what are those pockets that are looking extremely risky even at this point in time to you, Kunal?
See, I was okay with housing finance theme earlier. Again, this entire space has come off really big way. In fact, today I shortlisted one of the counters, which is LIC housing, which is now looking attractive. But still, I will avoid this sector for now. It's not just LIC housing. Even you look at Bajaj Housing Finance, this counter has never shown any trend itself.
Yeah,
Since listing, it's just in the downtrend itself. So
sure.
these are two counters which I'm avoiding for now. This entire space actually I'm avoiding for now. I think there might be some further correction, but LIC Housing Finance, if at all, comes down by say 10 odd percent more, I think then my view might change from avoiding to considering at least for initiating a buy. So yeah, this is a space which I'm
Okay.
avoiding for now. I've not initiated anything as of.
Housing finance companies, stay away at this point in time. Let's look at some of the stock spotting opportunities in the broadest market. There are some interesting names. So Coffee Day we had marked in the morning as well. It was a 20% circuit. Indoco Remedies is at 15% higher. Narayana Hrudale is up 13%. You also have Ruby Mills that's up in trade. Then you have stocks like you have Tube Investments that's up by 7 odd percent. You also have Heritage Foods after a long haul that's also buzzing. SML Isuzu is up and about in trade as well. Global Health Limited is up. Many of such counters from various sectors that are buzzing in trade in the broadest index. Within the Nifty Next 50, let's see if there are any interesting names. Varun Beverages is up 5% in trade today. Siemens is also up by 4.5%. Remember, there is this demerged entity of energy business that's going to be playing as trigger. Then you have some Adani Group stocks that are buzzing. You also have cement plays. United Spirits is also buzzing in trade. Many such counters that are buzzing. Let's actually discuss one by one some of the spaces here. Let's discuss QSR space and maybe this space also gets interesting because we are just at the helm of looking at seasons changing, summers, onset of summers as well. How are you looking at a Pepsi bottler like Varun Beverages at this point?
Fundamentally, honestly, I never liked Varun Beverages. In spite of QIP of 7,500 crores, I avoided this
Okay.
counter. But now look at the interesting observation on this chart.
Huh.
Yesterday, that is on Friday, the highest volume was recorded, and that volume was near to 430 to 440 mark. And today, this counter is up by around 5% right from that level itself. I have just shortlisted this counter based on the volume itself, and I have placed the trigger at 470. If counter goes above 470, I think this can be a complete turnaround from the present levels. Again, don't be in hurry to
Yeah.
initiate buy because the market sentiments are still really poor. But this volume is something which we cannot ignore. So considering that, I think if the higher top higher bottoms begin from 470, I think one can initiate buy on Varun beverages.
Okay, got that. Very diversified names again. I'm just going to be naming some so that all of you know what's actually buzzing today. You have Balmer Lorry that's buzzing. You have Kesoram Industries, Piramal Enterprises, SRF. These are some of the stocks that are buzzing. And I think it's the cement pack that is actually buzzing in trade today, starting from Ultratech, that was the top mover today. You also have some mid-cap names like KCP or Star Cement, Ambuja. Sanghi Industries. These are the ones that are buzzing again. Kunal, last week there was this big theme that Ultratech Cement entering cables and wires business. So Ultratech did show a knee-jerk reaction again. It was higher today because brokerage houses came out with stronger targets. How are you looking at the cement pack right now? Any interesting moves here that one should be aware of?
So in fact, I forgot to tell you that this is again that space which I would avoid for now when you asked about it. It's only because I'm not finding any good momentum here. And at the
Okay.
same time, the counters are still making lower bottoms. I mean, and there is no previous bottom nearby. So, again, on Ultratech itself, presently it's trading at 10,300. I
Yeah.
don't foresee any support till say at least 9,500 to 9,400, where we saw the previous bottoms in March and May 2024. So I'll stay away from this entire pack for now. If the capitulation happens at this level and consolidation comes on the price action, then we might think of. But otherwise, I'll stay away from this.
You'll stay away from it. Okay, got that. So that's the view that's coming in. We'll also discuss some other pockets as well. There are some stocks that are actually showing us sharp declines as well. So we'll discuss that too. Irida is something that I wanted to discuss with you. I mean, there were many targets that were given by brokerage houses on Irida, but it's now slipped even below the lowest target that was given. So it has been on a downtrend, we all understand, but the way it has been falling, it's testing a lot of patience for investors who got this stock upwards of 200, upwards of 230, 250 odd levels. How would you explain the kind of move that we are seeing right now? What has gone wrong with this? Futuristically speaking, should one continue to hold on to their loss-making positions even now on Irida?
See, Sakshi, there are two answers to be given for every such themes. The first is that where should be an exit, and
Yeah.
second, what if after my exit, if the counter goes up? If you have these two answers, then I think there should not be any panic in mind. So again, Irida is the counter which I was holding for quite a long time, and for the entire year of 1.5 years, this counter was giving zero returns. Eventually, it gave a break below 180, and there was a level where the sideways consolidation was coming to an end on the lower side. So there
Yeah.
was a point where I thought of taking an exit. As of now, it's trading at 147, and I have placed 165 as the alert, beyond which I'll think of reinitiating a buy. So, this counter is right now in sideways consolidation with negative bias. Why to hold on to this counter? So, if anyone is holding now at this level, emotionally, person might not be able to sell. So, I'm just sharing the support level, and that's at around 135. If the counter holds on to 135, I think we might see the uptick till 160, 165. And if counter goes above 165, that's a clear sideways trend negative reversal on the positive side. So keep these two levels in mind and place the bets accordingly. And even in future, whenever we initiate buy, just keep two answers ready: where to take an exit, and what if the counter continues the rally again, where we will think of reinitiating a buy.
Okay, fair point. So I hope this has really helped clarify a lot of doubts in the minds of people, because there were so many people questioning about Irida in our daily calls shows as well. So I hope this has really given a lot of clarity to all of you. Let's come back to several other sectors and how your approach is towards them. IT space, let's discuss this one. There are some ticks on the higher side today. Infosys is higher in trade. Some of the others also that are pulling up 0.7% higher. Both large caps and mid caps are showing us some signs, but I want to understand, with the way things are shaping up in the US, which is their biggest working ground. How are you approaching this space? Are you, because they were in last 2 weeks or so, a lot of sentiments are changing, a lot of the way people are approaching IT is changing. They were initially in the last part of 2024, they were pretty bullish about the kind of rally that was unfolding, but suddenly things are changing. Why do you think that is happening suddenly? Why do you think IT stocks are vulnerable at this point?
See, with all due respect to the administration in the United States, what we have seen is that the policies will remain uncertain for next 4 years, and there won't be any clarity because of whatever situations we have seen so far. So let's come to again, the IT performance, the stock performance. There is been a mixed bag. The couple of counters are still extremely lower, and couple of counters are showing good consolidation, and in fact, the trend is still being positive. Now, two such counters are Wipro and Infosys, which I personally like the most. Look at Wipro's performance in last 6 months, from October till March. This counter was in positive trend, and now it's in sideways consolidation. Right now, trading at 283, and today it's actually good. It's decisively up also. So when you look at the performance on the price action, it gives much better clarity rather than looking at the entire space. So this counter with the stop of 275, one can think of considering this as a trading bet with the target of around 325. And second, which I mentioned, is Infosys. I personally like it a lot. It's
Okay.
right near to the support level. 1675 can be the strong support on the chart, and with that as a stop loss, one can think of initiating a buy with the target of 1850. Now, these are the two only stocks under the entire IT pack which are looking attractive to me as of now.
Fair point. Let's discuss some of the other pockets as well. I wanted to discuss the new age tech stocks with you, and all of them we'll discuss separately with the kind of moves that we are seeing. First, let's talk about Paytm. Now, initially in the morning, this stock really dragged quite a bit because of the ED notice over alleged FEMA notifications. Clarification also came in from Paytm, and the regulatory filing on Saturday revealed that Paytm had received the notice from Enforcement Directorate regarding this alleged FEMA rule violations by its own company as well as the subsidiaries, Little Internet and Nearby. And Paytm has clarified that the alleged violations occurred when these companies were actually not its subsidiaries, and therefore we have seen some improvement come through. So what's your sense on Paytm? Second of all, I wanted to discuss also with you PB FinTech. Why do you think there is again continued pressure on this one? The third one that I wanted to discuss is Ola Electric with you. Why? Because there is again a lot of job losses news that's happening on this one. This is the second round of losses, and this would be almost a fourth of the current workforce that the company has. Of course, the company has already gone through a lot of concerns around safety and service measures as well. But despite that, despite the newer launches, despite the expansion, the stock is really not performing. It's below the issue price. It's further lower. How are you approaching these two or three stocks?
So the first is Paytm. Again, let's just go back and check out the performance between June 2024 to December 2024. The counter was up by from around 300 levels to 1000 levels, right? And that was a linear rally. And every time we were discussing on our show that it's just a buy, there is no sell at all. Now this counter entered the downtrend, and it's been a month. February was the entire month where the counter entered sideways consolidation. The strong support which we have seen on the chart is around 700. Counter has not given a single closing below 700 in last 1 month. This seems to be the strong support. Again, should we buy at this level? No, the trend is down. Let's wait for at least one higher top higher bottom. So if the counter gives a breakout above 775, I think that can be the good level to think of initiating a buy, because the trend should remain positive when we initiate buy. Now we come to Ola Electric. Again, this counter, as you rightly mentioned, has never been in positive trend. In fact, there was a ray of hope somewhere in November and December where the counter went up significantly from 65 to 100. But again, the downtrend continued. So it's a clear avoid counter for now. Where the bottom will be formed, let's wait for the volume to show us that. But for now, it's an avoid. Earlier possible entry on this counter as of now looks above 62 or 63. If someone is already holding, I would say take a pinch of salt. With the pinch of salt, one should take an exit. Take whatever the loss it is. If the counter reverses, we'll think of reinitiating a buy. But for now, it's an avoid.
Okay, for now it's an avoid. Okay, so that's the view that's coming in. We're just about 3 minutes for the markets to shut shop. Kunal, give us a sense and an outlook now on the markets. What are you expecting for March series as far as the markets go? Where do you think investors can continue to hedge their positions in the current situation?
Very clearly, Sakshi, too much of selling is happened. I'm not saying too much in terms of percentage or whatever, but the one-sided selling might not just continue. If the markets were to slide further, there will be a dead cat bounce. So on the Nifty, I foresee right now it's trading at 22,130. I foresee the levels of 22,800 first and 23,500 as a second target for the month of March. If that happens, we'll revisit and we'll see whether it's reversing in the trend or whether the downtrend might continue. So for the month of series of March, I'm very, very bullish, and stock specific moves will likely to continue. So the counters which we discussed in the beginning, those PSU counters and all, I think that trend might just continue going forward. Though it's the first day where we have seen an uptick, if the same thing continues for a couple of more days, then I think we'll get better clarity on these counters.
Okay, fair point. Well, we'll thank you then, Kunal, for being with us on the show and helping us really navigate through all of these wild moves that we are seeing in the markets, and hoping that things really improve as you have given the targets. We'll keep an eye out on those as well for the markets going forward. Stay tuned.
Absolutely, my pleasure. Thank you so much.
Looking forward to welcoming you back soon on Business Today. 22,132 viewers, 0.05% of an uptick. So we've considerably improved from the day's low point that was somewhere at around 12 or 12:30. But from there also, we have seen pretty choppy trade. The Nifty is probably just going to end flat with a positive bias. as it looks. We're just 8 points higher in trade, 22,133. So it would be just like, kind of a formality to say that yes, we've snapped, the weakness at this point in time. Metals shine bright, over a percent higher in trade towards the closing. Realty about over a percent higher. Nifty next 50 names over a percent up. IT up by nearly a percent. Consumer durables up 0.8. You have pharma, auto, FMCG also about 0.2 to 0.3% higher. Midcaps just trying to save the blushes and managing to pull themselves above the flat line. But when we look at the small cap, that still is in the lower end. Media, oil and gas, the Nifty Bank entirely seems to be on the back foot today. So that's the one that is probably going to be ending in the red itself. BEL 4.6% higher, remains the top mover on the Nifty today. You have Grasim, Eicher Motors, JSW Steel and Ultratech Cement as the top movers. On the lower end, again you have heavyweights like Reliance Industries, HDFC Bank, Bajaj Finserv, Bajaj Auto and Coal India. These were the top drags as far as the Nifty is concerned. The screen's frozen, 22,143. 18 points higher in trade as far as the Nifty is concerned. PSU stocks managed to end about 1.4% higher. So that was the outperforming sector among all the sectoral indices today, with REC up 5%, BEL, PAFC about 4.5% higher, BHEL, HAL, Steel Authority, Concord, HPCL, so oil and gas names and the other defense names as well, pulling up the overall PSU basket. Well, we'll leave it at that. Thank you so much, viewers, for being with us throughout the coverage on the markets today. But we'll hope that things actually turn for the better throughout the course of this week. We'll continue to track the markets for you tomorrow. But even today, beyond the stock market hours, you can stay tuned. There's a lot more to really understand as far as the world of mutual funds go, markets outlook is concerned. That will continue even after the stock market hours. Stay tuned. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show